Morning, Steve Freed in Chicago with the morning grain counts. Well, we had a very active trade yesterday, a series of events. Number one, Russia came out and said they were going to put restrictions on exports by country, maybe by quality. They've got 15 million tons of wheat in which they have committed for export or have exported. There's probably another 7 or 8 million tons that the market thought they would export. And that's kind of in flux right now as to whether they will export that or not. Sanctions against Russia has increased their domestic food prices, and so they may be holding back this wheat to try to bring those prices down. We also see the collapse in the ruble, kind of helping some of the outside markets. And yesterday when the U.S. Fed decided they were going to be slow in increasing rates, you saw a lot of markets rally on that news. Finally, we also saw that the U.S. eased restrictions and improved relations with Cuba. The first thing that kind of came out of whether it was the USDA or the market in general is that this could open up markets for agricultural products, maybe machineries, maybe not as much exports of the grains, but it could help things like rice and maybe soybeans. So that has helped the market. Overnight wheat continues to surge higher, above what a lot of people think is value based on spec buying and because of this Russian situation. There's I think plenty of wheat in the world, especially out of Europe, but we'll just kind of have to see if the U.S. gets any business because of this. Also in the corn market is kind of inching up, not as fast as the wheat market. There's plenty of corn in the United States to satisfy the demand. The big unknown there, number one, is will the U.S. lower the crop in January? And also, will China come in and buy more DDGs, or will they eventually buy corn? Over in the beans, we also continue to inch higher in the bean market. Nearby demand is strong, but when you start looking at favorable South American weather conditions, the numbers for 2015 look bearish at these price levels. So headlines are bullish, speculators are buying. You're seeing the higher stock market today, you're seeing higher crude oil market, you're seeing the higher dollar, and that's helping most commodity prices versus the numbers, which if you just look at them at surface are still negative. Because of the fact that the Fed cattle has been down limit 5 days in a row, the CME announced extreme measures last night by increasing the limit to 45 cents. We are limit down to 45 cents starting this morning. We'll look at export sales data and see if we can get anything out of that. Later today, the USDA is going to put out a 10-year projection of U.S. Certain S&Ds. This is for budget purposes. They usually put this data out in February before their annual meeting. Not really sure why they're putting it out today, but we'll see what they think about production and demand down the road for the next 10 years. Tomorrow, a private estimate will come out with 2015 acres for all crops, and I think that's about enough to chew on for one day. As always, these are my thoughts. They're not those of ADM or ADM Investor Services, and have a safe and profitable trading day. Again, if you're watching this video and you would like to communicate with us on social media, send us some questions. We'll get back to you with the answers as soon as we can.
Okay, cool. Thank you.